Welcome back to the channel. Today we're taking a closer look at IonQ, ticker symbol IONQ, and why the company's latest results may not be as straightforward as they appear. IonQ has once again attracted investor attention after reporting very strong second quarter revenue growth. But behind the headline numbers, there are several issues investors need to understand, especially after IonQ completed its massive $1.8 billion acquisition of SkyWater Technology. So let's break down what is happening with IonQ, the latest revenue numbers, the SkyWater deal, the company's valuation, and what could happen next. And remember, this video is for informational purposes only and is not financial advice. Always do your own research before investing. IonQ reported approximately $80 million in revenue during Q2 2026. That's a huge increase of about 287% compared with the same quarter last year. The company also beat analyst expectations by roughly $13.6 million. At first glance, this looks extremely bullish. However, investors should look beyond the headline percentage. IonQ raised its full-year 2026 revenue guidance to approximately $280 million to $290 million. While that is higher than the previous outlook, the increase wasn't nearly as dramatic as some investors might expect after such a large quarterly revenue beat. Management also said organic revenue increased approximately 132% year-over-year in Q2 and maintained expectations for around 100% organic growth for the full year. IonQ's quantum computing business is clearly growing, and the company continues to deploy systems internationally. During the quarter, IonQ began shipping systems to the Korea Institute of Science and Technology Information, while its fifth-generation quantum machine for Quantum Basel in Switzerland entered final assembly. These deployments demonstrate that IonQ is making progress commercially. But now we have to talk about the biggest change to the company's financial story: SkyWater Technology. IonQ completed its approximately $1.8 billion acquisition of SkyWater on July 31, 2026. The deal involved both cash and IonQ shares, including approximately $15 in cash for each SkyWater share. This acquisition is important because SkyWater isn't simply another quantum computing company. It operates a semiconductor foundry business. That means IonQ is now becoming a much more complicated company. Before the acquisition, investors could largely view IonQ as a high-growth quantum computing company. After the deal, a substantial portion of future revenue will come from semiconductor manufacturing. And that creates an important valuation question. SkyWater generated hundreds of millions of dollars in annual revenue, but its growth profile is very different from the explosive growth investors expect from quantum computing. SkyWater reported approximately $161 million in Q1 2026 revenue, while estimates for its full-year revenue were around $610 million. If those numbers remain relatively stable, SkyWater could contribute significant revenue to IonQ without producing the same type of growth rate as IonQ's core quantum business. That's why investors shouldn't automatically assume that more revenue means a better valuation. A company can increase revenue through an acquisition, while its overall growth rate actually declines. And that's exactly what investors need to watch with IonQ. The company has a market valuation of roughly $18 billion, which is extremely high compared with its current revenue. Before fully incorporating SkyWater, IonQ was trading at more than 50 times its projected 2026 revenue. Adding SkyWater revenue lowers the sales multiple, but it doesn't necessarily make the company cheaper. The reason is simple: the market capitalization remains high, while the additional revenue comes from a slower growth business. Looking toward 2027, estimates could put IonQ revenue around $408 million and SkyWater revenue around $490 million. That would create combined revenue approaching $900 million. At that level, IonQ could trade around 20 times sales. That sounds much more reasonable than 50 times sales. But investors still need to ask whether the combined company deserves such a premium multiple. Another major concern is profitability. IonQ reported an adjusted EBITDA loss of approximately $120 million in Q2. The company also burned more than $140 million per quarter during the first half of the year. The SkyWater transaction required a significant cash payment, leaving IonQ with a pro forma cash balance of roughly $2 billion. While $2 billion is substantial, continued heavy cash consumption can reduce that balance quickly. The acquisition also adds a capital-intensive foundry operation, which could require significant investment in equipment, facilities, and manufacturing capacity. This is one of the biggest differences between IonQ's current situation and the simple quantum computing growth story investors were previously buying. There is also the long-term opportunity. The quantum computing industry continues to move toward what is commonly called Q-Day, the point where quantum computers could potentially solve certain problems that classical computers cannot efficiently handle. Some industry expectations now place that milestone around 2029. If quantum computing adoption accelerates dramatically over the next few years, IonQ could potentially benefit significantly. The company has technology, international deployments, government relationships, and a growing position in the quantum industry. But there is an important distinction investors should remember. A technology can have enormous long-term potential, while the stock representing that technology can still be overvalued. IonQ stock previously traded above $80 during the quantum computing boom, showing just how much optimism investors can build into the share price. The question today isn't simply whether quantum computing will succeed. The bigger question is whether IonQ's current valuation already assumes too much future success. Investors should therefore monitor several things going forward. Watch IonQ's organic quantum revenue growth. Watch SkyWater's revenue growth after being fully integrated. Watch adjusted EBITDA and free cash flow. Watch capital expenditures. And most importantly, watch the valuation compared with the actual growth rate of the combined business. The bullish case is that quantum computing becomes a massive commercial market, and SkyWater gives IonQ additional manufacturing capabilities and strategic advantages. The bearish case is that quantum growth slows, SkyWater remains a slower growth business, losses remain high, and the stock continues trading at a premium valuation. That creates a very different risk-reward profile. IonQ may still have enormous long-term potential, but investors need to separate the excitement surrounding quantum technology from the financial reality of owning the stock. The $1.8 billion SkyWater acquisition changes IonQ's revenue mix, increases business complexity, and could significantly affect the company's growth rate going forward. So don't focus only on IonQ's 287% revenue growth. Look at organic growth, acquisition-driven revenue, cash burn, profitability, capital requirements, and valuation. Because in the stock market, a great technology doesn't automatically mean a great investment at every price. If you found this analysis useful, make sure to like the video, subscribe to the channel, and turn on notifications for more updates on IonQ, quantum computing stocks, and other high-growth technology companies. And remember, this video is for educational purposes only and is not financial advice. Always do your own research before making any investment decision.